Hello to all traders and welcome back to another market review brought to you by Orbex. The big news coming out of the early Asian session is that the Bank of Japan have finally, after 17 years, raised their interest rate and it's come out of negative territory actually. It was previous at minus 0.1% all through the pandemic and as I just said for the last 17 years, but now it's popped up to 0% and across the board on the charts, it doesn't seem like the yen is favorable at the moment, dropping over 100 pips against the dollar. But most notably, it becomes the last country that had negative rates. So is this a sign of the times that Japan have finally conformed and are hitting their mark, because it's looking likely that after the Fed, the Bank of England, the European Central Bank are all targeting this 2% inflation rate. Does this mean that with higher salaries, better GDP, Japan are following suit? We'll have to wait and see if this actually stays true. But on the charts, we'll get right on them. On the 4-hour chart, just intraday at the moment, we're just looking at this V-shaped recovery now that is in place. But we could be seeing a bit of a resistance now as we've seen a bit of a double or triple top after this choppy consolidation before a drop lower. But from the early session, we were trading at approximately the 149 area. Now we're trading at the 150.40 area. So we're just seeing now over 100 pips wiped off of the yen. We are in overbought territory, so we could be seeing a bit of a slowdown, especially if we get a bit of a bearish divergence as well. So all eyes, as I said, on the Bank of Japan. It was kind of expected that it will happen at some point this year, but it has happened a little bit earlier than a lot of economists have expected. So just keep an eye out for all the moves on the other yen pairs as well, the euro and the pound, for example. But let's get back into the markets, looking at the euro dollar as well. Just wanted to highlight that we are seeing more of a strength now in the dollar, as you can see from the recent peak of just above 109.70. We've fallen very short, moving over 100 pips, and with this bearish divergence in place on the RSI, it could actually bring price action even lower, which will bring out this particular support area of roughly about the 108 psychological handle. So if this does come into play, we could actually see another 40 to 50 pip drop before we have a bounce to the upside or a possible consolidation. So just keep an eye out for the Forex pairs. Very exciting news though when there is a big fundamental news impact in the market, such as the Bank of Japan. Always a very good starter to the markets day, that's for sure. So we'll bring you all the latest action in the markets on our Telegram and YouTube channel. So stay ahead, stick with us, trade responsibly, and we'll speak again next time. Bye for now.